All right, let's talk about two giants in the industrial tech world who are playing the game in completely different ways. You've got one who's a master of buying up other companies, and another who's a flat-out pioneer of innovation. So in this explainer, we're going to put Ametek and Keysight head-to-head, look at their 2025 financials, and really figure out which strategy is winning the day.
So, you might be asking, why should I even care about these companies? Well, you might not know their names, but I guarantee you, their technology is all around you. It's in the phone you're holding, the car you're driving, even the medical gear that saves lives. All of it depends on the super precise tools made by companies like Ametek and Keysight. They are, quite literally, the invisible giants holding up our tech economy. And if you want to know where technology is headed, you have to understand their game plan.
And what this whole thing really boils down to is a clash of philosophies. It's the consolidator versus the innovator. You know, if you ask a seasoned portfolio manager, they're going to look at Ametek and see a beautiful, disciplined machine built for steady growth. But if you talk to a tech journalist, someone always chasing the next big thing, they'll tell you Keysight is the real story, a company betting it all on the bleeding edge.
Okay, so let's pull back the curtain and properly meet these two industrial titans. What exactly do they do, and where do their paths really start to split? Let's dive in.
Just by looking at their core markets, you can immediately see their different DNA. Ametek, well, they play in these super established, high-stakes industries like aerospace, medical automation, and industrial measurement. These are markets where stability and precision are everything. Keysight, on the other hand, they are living on the frontier. They're making the tools we need for things like 6G, next-gen AI data centers, and yeah, even quantum computing.
So now, let's pop the hood and look at the actual strategic playbooks these two companies are running. This is where you see the huge difference between being a consolidator and an innovator.
From that portfolio manager's point of view, Ametek's strategy is just a thing of beauty. They call it the Ametek growth model. And a good way to think about it is like a high-performance engine, right? It's meticulously built for pure reliability and steady, powerful output. It's all about consistent, predictable growth, driven by just executing flawlessly on these four pillars. And here's the engine room of that strategy, their acquisition machine. It's a four-step process they have down to a science. They find these awesome little companies that are leaders in their niche markets. They bring them into the Ametek family, and then they plug them into their operational excellence system to squeeze out every bit of profitability. I mean, they've done this 15 times since 2021, including their recent pickups of Kern and FARO. This is a well-oiled machine that just keeps on running.
All right, now let's do a complete 180. The tech journalist would immediately point you to Keysight's philosophy, the Keysight leadership model. If Ametek is that powerful, reliable engine, Keysight is more like a precision surgical tool. It's designed for these incredibly high-risk but super high-reward challenges. Their entire focus is on being the first to market with solutions for technology that, frankly, might not even fully exist yet.
And you can see how this model works right here. It's this virtuous cycle. It all starts with market insight. They figure out where the world is going. That insight lets them pour money into the right R&D, which leads to these amazing first-to-market solutions. And right in the middle of it all, customer success. Happy customers give them more insight, which just keeps this powerful cycle spinning.
Okay, strategy is one thing, but talk is cheap, right? How did it all actually shake out on the bottom line in 2025? It's time to bring out the scorecard and let the numbers do the talking. The very first thing that just leaps off the page is their spending on research and development. Our tech journalist would look at Keysight spending almost 19% of their revenue on R&D and say, see, that's commitment to innovation. But our portfolio manager, they'd see that as a huge red flag, a really risky strategy compared to Ametek's much more careful 5%.
And just to put that percentage in perspective, we're not talking about small change. That's over $1 billion. 1 billion. This isn't just a number on a spreadsheet. It's a massive, tangible bet that they can invent the future.
But for our portfolio manager, there's really only one number that truly matters: profit. And on that front, Ametek is the undisputed champion, a stunning 25.8% operating profit margin in 2025. That operational excellence model, it's a masterclass in turning revenue into actual cash.
Now, let's break this down with a DuPont analysis. Don't worry, it's simpler than it sounds. It just unpacks a company's return on equity. As you can see, Ametek has a way higher net profit margin. That's their cost control at work. But look at the bottom line. Keysight actually squeaked out a slightly better return on equity.
How is that possible? Well, they're using more debt, more financial leverage. You can see it in their higher equity multiplier. It's the classic trade-off, Ametek's pure efficiency versus Keysight's leverage bet on growth. And here's another number that just screams stability. At the end of 2025, Ametek was sitting on a record backlog of almost $3.6 billion. Now, this isn't some guess about future growth. This is a pipeline packed with confirmed orders. It gives them incredible visibility and a huge safety net for the year ahead. So we've seen how they did in 2025, but what about tomorrow? Where do these two companies placing their bets for future growth? Let's take a look.
For Ametek, the future, well, it looks a lot like the present, just bigger. They are doubling down on what works, these incredibly stable, high-margin defensive markets. Things like aerospace repair and critical medical parts aren't really affected by economic swings. So the strategy is simple. Keep doing what they're doing and compound that growth with more smart, bolt-on acquisitions.
Keysight, on the other hand, is betting on a future of explosive, rapid change. They're planting their flag right at the center of the AI revolution, the rollout of 6G, and the next wave of defense tech. And with their huge acquisition of Spirent, they're showing everyone they are not afraid to make massive, transformative moves to own that future.
So, we've looked at the strategies, we've crunched the numbers, and we've peeked into the future. What's the final takeaway? What's the bottom line for you? Let's distill this all down into a final playbook.
And this quote from our analysis really says it all. The conclusion isn't that one strategy is better than the other. They just serve two totally different goals. If you're an investor looking for stable returns and growth that can weather a storm, Ametek's compounding model is incredibly compelling. But if you're trying to capture those huge, explosive gains that only come from massive tech breakthroughs, well, Keysight is the one built for that race.
So, what's it going to be? The steady, reliable consolidator or the bold, ambitious innovator? Only time will tell which bet pays off bigger. If you want to go even deeper into the numbers and read our full analysis, you can find the entire white paper over at HDINResearch.com. Thanks for joining us for this explainer.